Hey future millionaires, this is Phil from Next Chapter Financial. In this video, we're going to talk through mutual funds. And further, we're going to show you how you could turn like $22,000 into close to $60,000 over a 5-year period. Now, we're going to go deep into mutual funds and show you how mutual funds can work to your advantage within your 401k. Now, we're going to go through mutual funds. We're going to go deep. We're going to get you real educated on what they are. We're going to talk about what mutual funds are, the types of investments, and how to buy them. Then we're going to go deep dive into at least 2 of them. Why? Because we want to show you the value and the opportunity of a mutual fund. And like I said, we're going to wrap this up to show you how a small investment of $22,000 over 5 years in a 401k could have shown some amazing results. So let's get deeper into what mutual funds are. Mutual funds are a type of investment, aka an investment vehicle, more formally known in the circles of the finance space. But let's bring this down to very plain English. They're an investment option for everyone to build wealth. And I say everyone because, again, there are many opportunities with mutual funds that everyday people can access. And that's my big push, informing people to understand that everyday people can access this. So, whether it be an individual or a small group of investors, have access to mutual funds that are professionally managed. These professionally managed portfolios or group of investments, mutual funds, are divided into many categories that are tracking against a certain type of investments. And these investments should have an objective. So a mutual fund will have an objective that will tell you this is the type of investments that we are going for, and these are the types of returns that we're going towards. And it gives you a full perspective of what the goals are of that fund. Mutual funds do have annual fees and expenses that you need to keep in mind as you're buying them that will sometimes affect the overall return. However, it's important, this is why we want to wrap up here on this slide, mutual funds are usually the primary option within your employee-sponsored retirement plans. So it's your 401ks, 403bs, and education savings plans for kids. So it's important to understand what mutual funds are so you can make great decisions. And it's not that hard to make these decisions within your 401k or your employee-sponsored account. Or if you like them so much, you can do them in your IRAs or your just in general investment accounts. It's really up to you. There are so many types of mutual funds out there. There are stock funds that are grouped into subcategories of large cap, mid cap, and small caps. You've got bond funds, which are composed of just all bonds. Index funds that basically track to mirror an index. Then you have balanced funds, which will be like a blend. So that balanced fund might say our objective is to be 50% large caps and then 50% bonds. Or it could be different, 50% mid caps, then 50% bonds. So it's important to understand what you're getting into. Then you have money market funds. These money market funds, basically, they go out there and try to find the highest return money market accounts and invest in that only. Now, money market accounts are secured in a different way, and what that means basically is they don't typically go down in value. And also money market accounts don't typically change their rates super frequently, so it's pretty easy for the investment manager to understand what's going to happen for the 6 months to a year perspective. Because a lot of times those money markets will even say, it is our goal to provide rate of return of 2% or 4% for the next 3 years. And they want to stick to that because they want people to know and trust them to to invest in that money market to get those returns. And then from there you have income funds. These income funds, basically what they are is they are funds that their goal is to generate income. So instead of reinvesting and to grow the fund, their goal is to generate income that is sent to you, the shareholder. So I have $1,000 invested, and if the income fund is targeted to give us 10%, it's annually, it's going to try to send me $100 per year on that $1,000. But over the years, it adds up, right? And then you have international funds, which basically, or global funds, they are doing a broad investment perspective, and they're going for items outside of the U.S. typically. So it would be very region specific. You want to do India or China or Europe or South America, and they're going to invest companies that have a large presence in those countries. And then you have sector plays or specialty sectors funds. These are like, I want to do an investment only in natural gases or only in precious metals because I believe that's where money is going. And so you've got a fund that's all it does. It tracks that. Now that you understand the many categories of mutual funds, let's go deeper into how do you actually buy them. So basically, there's a couple things you need to do. Step one, determine where you're going to buy it. If you're not going to buy it in your 401k, is it going to be an IRA or a brokerage account? And again, an IRA is an individual retirement account. Then from there, you need to figure out where you're going to purchase that. So you need to open up an investment broker account, an account with an investment broker. Then you're going to decide from there how frequently you're going to invest. Weekly, bi-weekly, or monthly. Again, when coaching anyone or anyone in general should really be trying to go for weekly, bi-weekly, or monthly. Just because it gives you the opportunity to buy over the long haul, and it gives you the opportunity to buy when stocks, the mutual fund goes down in value, and you can buy it cheap, and then when it shoots back up, you just had a gain, right? Over the average of the year, you could have gains just because the funds went up, and you bought at points when it went down. And then step 4, you want this to be automatic. You want to put in your budget that you're going to invest $500 a month, and you want it to be automatically taken out of your bank account, automatically transferred into your brokerage account, and then automatic purchases. That is the goal. And again, we put this asterisk here. Most employee retirement plans contain mutual funds. So it's important to understand that this option is available to you just in your retirement account. And that may be the only place you want to do mutual funds, which is great. A lot of times employers have great options. There are so many investment brokers out there. Just going to list a few to help you guys see who's out there. There are so many. Do your own research. Figure out who works for you. We're going to go through some of the criteria of what you should be looking for as well in this recording. So you have Fidelity, Webull, M1 Financial, Charles Schwab, E-Trade, TD Ameritrade, TIAA Craft, and Vanguard. I want to point out 2 of them for you. Fidelity currently is the nation's leader in 401ks. So they manage the most 401ks. Vanguard's probably in the top 5. Also, we're going to be going over some mutual funds provided by these 2 companies. What do you need to keep in mind when you're looking at investment brokers? Trading fees. The ability to do, you want those trading fees to be as low as possible. Also, you want the ability to do fractional shares. Now, this is going to be determined by 2 things. 1, the actual investment broker, and then 2, the fund. So sometimes the fund may say you're not allowed to do fractional shares up front. So don't be swayed by that. That just may mean you have to do a whole share, the first purchase, and then all the purchases afterwards can be fractional. So do your homework. Figure out what the fund rules are. And it's very upfront. It's very upfront. It's easy to find. In another video, we'll walk through that. It's really easy to find. Also, you want to go with an investment broker that have screeners to help you narrow down the group of funds that you want to dig deep into before you make a purchase. You want some risk analysis built in. You want good rating tools. You want education, and you want reports and research. Having a combination of all these items or all of these items and stepping through them, you're going to get very comfortable determining which mutual fund makes the most sense for you to do what? Build wealth, right? Plain and simple. We're going for building wealth. You're investing for the long haul, and you want to build wealth. Here's some other important information you need to know about mutual funds. Mutual funds are sold at end-of-day pricing. And what that means is end-of-day trading prices. And what that means is stocks and bonds, stocks will go up and down in price all day. So the price of 9 a.m. is different than the price of 12 noon, and 2 p.m. Mutual funds are not like that. If the mutual fund closes at a price of $350 on a Wednesday, it'll sell for that price all day throughout Thursday. And then at Thursday, the price resets to a new price. Why? Because mutual funds are managed and in a way that they have to do end-of-day pricing. And let's talk about managed. They're professionally managed. That means you have investment managers that are looking out for the fund to meet those objectives that you will see plain and simple in the fund objective statement. Because it's professionally managed, you will have annual operating fees, usually in the neighborhood of 1% or less. In this video, we're going to focus on the ones that are under 1%. Those professional managers do risk analysis, so it's important to appreciate what they're doing for you, and that's the risk analysis, and to meet the fund objective. Now we're going to go into some popular mutual funds. Popular because, well, they're doing great. Okay, so right now you've got Fidelity Select Semiconductor. This is a technology fund. That's the sector it's in. And this goes by the call of FSELX. We're going to go into some of the returns on that one, I believe. And then you got another one that is the BY Mellon Natural Resource Fund, going under the call of DLDRX. And when we point this out, this is what you would research. You could type this in your investment broker or another website, and it'll give you all the details. You just have to know the actual fund call number, the fund name. And then from there, this is an energy fund. Another one we have is the Invesco Small Cap. Now, again, small caps are your small publicly traded startups that are doing well. And so Invesco decides to do a whole fund dedicated to them. And then from there, you've got the MIRSX, Victor Intelligence Small and Mid Cap Fund. This is a blended. This is the mid cap. It's blended. Look at that. You got a combo. So if you're the type of person who says, I don't believe I want all mid caps, and I don't believe I want all large cap, but I want to do a mix of small and mid cap, this might be the fund for you. And look at that. Right here is a great example of how you can you hit two sectors in just one fund. And then finally, we're going to wrap up with this one, the Vanguard Global Capital Cycle Fund. This is a precious metal one. So this is a specialty sector fund. Okay, now let's dig deep into this Fidelity Select Semiconductor. First off, you have an annual expense ratio of roughly 0.69. Not bad, under 1%. With this fund, in the last year, it had a 54% return. Then it had a 35% return in a 3-year. Then it had a 29% in a 5-year. And then from there, in a 10-year, showed about 27%. So what this means is, if you held it for 10 years, this is what you would have seen. If you held it for 5 years, this is what you would have seen. So on average, the average of all the years. And so we're going to show you more of that. Okay, so what's in this fund? At your fingertips, you could find out the information of what's in this fund by looking into its portfolio holdings. You're going to see some names you don't know and some names you do know. NVIDIA Corp, you should know that one, hopefully. Then you're going to see, hey, look at that. It's a semiconductor portfolio, and what does it have? NXP Semiconductors, ON Semiconductors, Taiwan Semiconductors. That makes a lot of sense. They said they're semiconductors, and they invest a lot into semiconductor manufacturing companies. Then you've got Broadcom. Then you have a total market. Why do you have total market money? Because they're probably holding onto some cash, waiting for the next opportunity to buy more. And that's what you do when you have a mutual fund that you're trying to grow and build wealth for your shareholders. And that's what those investment managers are paid to do. Now let's dig into the Invesco small cap. Okay, this one has an annual expense ratio of 0.84. Then 1 year of 21%, 3 year of 33%, 5 year of 12.5%, a 10 year of 10%. And what is it holding? So apparently, as of the end of April, it had total cash. Again, money on the side to make the next purchase. You've got Western Alliance, Northern Oil, Tech Resources, Pinnacle Financial, Spectrum Broadcom, A&E Corp, and Expedia. I'm just highlighting some of the big ones that hopefully most of you know. These are a great way. They're not the most well-known companies because they're small caps, right? These are smaller startup companies that are publicly traded that the portfolio manager believes has a good opportunity for upside returns. So now, what are we going to do? We're going to take it to the spreadsheets. We're going to show you how those two funds would have performed over 5 years and how your balance would look if you invested consistently for 5 years. Okay, as promised, we're going to give you an example of how you could have turned like 22,000 into like 60,000. Okay, so first off, we're going to assume that someone's making about $75,000. They're going to contribute 6% because their employer says if you contribute 6%, we will give you a 3% match. We will give you a 3% match, right? So your contribution is $4,500 a year. Your employer match is $22,250 per year. Now, as a reminder, we know our returns. We put those in. We just reviewed them again. You've got a 1 year 54, 3 year 35, and then 5 year 29 for your Fidelity. And then for your Invesco, 5 year at 12.5. Okay, so let's see what this turns out to. I think you're going to be really surprised. Look at that, $63,000. So let's walk through this. You had $22,000 that you, the employee, invested. Then you had growth on your $22,000 of roughly $19,000. That's 31% of that 63. Then your employer match, that was $11,000. And then growth in that employer match was about $9,000. So let's talk about this one more time. You invested $22,000 and then you enjoyed growth. Your employer match was free money basically to you. And then you got growth in that employer match. And that was in 5 years, you turned $22,000 into $63,000. But now let's do something pretty nuts. Let's see what this would look like if you did 10 years. 10 years of consistently investing just 6%. And this doesn't even account for you getting raises. $219,000. Wow, look at that. So $45,000 is what you would have contributed over 10 years. And that $45,000 would only make up about 20% of that total $220,000. You would have had $100,000 growth on your contributions. Your employer would have contributed $22,000, and then the employer match would have grown by $50,000. So look at that. It's pretty amazing. Consistency. Some great investment choices, or even just okay investment choices, and consistent investing over the long haul really builds some wealth. I hope you enjoyed this video. More details to come. All right, thank you so much. I hope you enjoyed that review of mutual funds. Again, mutual funds present a great opportunity for you to invest and build wealth over the long term. So if you enjoyed this video, please like, subscribe, and share. Also, if you like our template, check out that Etsy link below. The Etsy link below has a link to our Etsy shop, which has our templates and our printables. Check them out. They're reasonably priced. Give them a shot. Also, more reviews and deep dives to come. I mean, a lot more. Link to other videos that you might find useful. Mutual ETF funds review, emergency fund review, budget review. And again, one more time, mutual funds are a great opportunity to help you build wealth. So please stay educated, practice, learn, and you can do it. Small changes every day can help you. This is Phil from Next Chapter Financial. Thank you for your time.